I'm Shae Russell from mining.com.au, and joining me today is Paul Hart, the Executive Director of Canary Capital. Paul, it's great to see you. How are you?
Great to be here, Shae. Very well, thanks. Especially with a gold price at a record level.
Isn't it a fantastic thing to wake up to on this Friday?
Yes.
I'm glad you mentioned gold because that's exactly where we're going to start today's conversation. Now, Canary Capital likes to look for investment opportunities, and in particular, you're focused on gold at the moment. Tell me, what is it that you like about gold?
So Canary Capital believes that in the bullish case for gold, it's underpinned by strong central bank demand coming from several countries like China and India, geopolitical uncertainties, shifting global economic power from the west to the east, and growing recognition of gold as a safe haven assets during uncertain times. As the world navigates through these issues and complex economic and political issues, we see that the demand for gold will continue to increase, further strengthening the price in the future. And we know we're already at record levels.
So when it comes to looking for companies with exposure to gold, what do you look for?
So there's three types of gold companies that we look to invest in. The first type is those that are in production and generating profits and cash flows. The second is those that are on their way or very close to moving into production and in a profitable way. And the third type is those with significant resources that have the potential to grow quickly over time and preferably are located near a plant that's underutilized. So they're the three types of companies that we look at.
That's a very interesting point you make because you recently released a report on Aureka, formerly known as Navarre. What attracted you to this company?
So I was aware already of Navarre in its previous existence a few years ago, so I knew the assets. My good friend Peter Taylor from NWR invited me to a meeting to hear about the recapitalisation that James Gurry introduced me to. And when I went to the meeting and heard the numbers, because I was already aware of the assets, that they were buying basically assets that the market had priced at $159 million in 2022, and they were buying it for $525,000. To me, it was a no-brainer, and it presented an outstanding investment opportunity. So I jumped on it there and then and said, look, we'll subject to DD, we'll get involved in it.
So once they've come out of administration, what kind of valuation methods were used and sort of what was the end result of your valuation for Aureka?
So we can't do a traditional discounted cash flow valuation, which we like to do on companies at Canary Capital. So what we had to do to work out the level of upside was to do a comparable on EV resource per ounce and compare it to its peers. On those numbers, Aureka came up with its current resource, which is 305,000 ounces at 2.43 grams a tonne, which is not a bad grade, I'll add. Its current resource came in at $14.60 per ounce, and the peer group is valued at about $43, $44 an ounce EV, economic value. So on that basis, we saw straight away that it's at least three times undervalued, and that's before any upside is factored into in terms of the exploration target, which would put out another 280 to 420,000 ounces pretty quickly once they get drilling in the near future.
You seem to view that Aureka is running at a significant discount. Tell me, what are your expectations for your clients with Aureka?
Well, when we go into any investment, we conduct a lot of DD, and our clients, we're not after one times, two times, we're after 5, 10 times, and we also take a very long-term view of companies. So our clients' expectations when they come into companies with us, because we invest alongside them, that's one of our principles, is that we've done our DD, we see the multiple upside in the company and over time, and they're after significant returns, not in the 10, 20, 30%, but in the several times. So that's the expectation. They also expect us to keep an eye on the investment. So if if things do go wrong, we're their eyes and ears looking at the investment before, so we identify things before it goes pear shaped.
Thanks for sharing your insights into this report. It was a great read, and I highly recommend anybody interested in Aureka go read this report as it's got a lot of good quality information in there. Paul, thanks for your time today. It was great to speak with you.
No worries. Thanks, Shae.